For about the first decade of doing this, I said things that were incorrect.
Me too.
Which, no, honestly, was that I thought for a long time that mortgage rates were almost directly linked to the 10-year bond yield. And so if yields went up, mortgages would go up. You've put me in my place in a good way on this. They're related. They are related.
Right.
So if we see the 10-year, if we ever see the 10-year move higher again, what can we expect from mortgage rates, and why do they move?
Well, Diana, you made a really good point. We buy based upon our monthly payment, and so that first-time buyer is very sensitive to rates. That is the source of demand today in the housing market, the millennial first-time buyer, and we already see now that sort of pullback because of affordability. Not everywhere, but certainly in some markets, and house prices are beginning to reflect it.
But you know my point, Diana, if we see the 10-year yield, it touched 3%, which, by the way, we act like is high now. For somehow 3% is high. I remember the days of, 7 and 8%. My gosh, I feel old. If we see the 10-year go up, would we expect, Diana, mortgage rates to necessarily go up?
Mortgage rates would go up, yes. And when we talk about loosely following, yes, they loosely follow the 10-year yield. But there are also other factors in it, like the government pulling out of the mortgage market, mortgage-backed securities. Are new investors going to come into the market? That plays in on rates as well. We know that we're not having the government play so much in the mortgage market anymore. We're looking toward mortgage reform potentially in the next couple of years. What's that going to mean to rates? So, again, it's looking at how much higher rates. And you're absolutely right. I mean, I bought my first apartment in Manhattan. 9%, and I was so excited.
Felt good about that.
It was really good. Yeah. I'm not going to tell you what year, but it was really good. But again, house prices have been rising because mortgage rates have been so artificially low. So it's kind of part of the problem. If we see rates go up, home prices might come back a little bit.
Mark, is there any reason to be worried now? We're starting to see radio ads, commercials, no money down, 5% down.
Is this happening again? Are we in a bubble?
That's kind of what I'm asking. Are we getting stupid again?
Well, it's really hard to say. I mean, we have to be concerned, obviously, about those kinds of what we call financial innovation, maybe, would be a nice way to say it.
That's a nice way to say it,
I don't think it's happening.
But there's really fundamentals are very different right now than they were back then.
Why? Tell us why it's different. It is different this time.
This time it's different?
Yeah, I've heard that.
Famous last words, right?
Exactly.
But we have strong fundamental demand in that first-time millennial buyer. And yes, there is a response to rising rates, but we're talking about 4, 4.5, 5, not 9, 10, 12% mortgage rates. So it's very different for that reason. And we just haven't built enough homes. And so people, last time I checked, people like to live indoors. And there is going to be that strong push on housing because of those fundamentals.
And I don't think you're going to see those mortgages again. I mean, maybe you'll see an ad on TV, but that is not the bulk of the market. Foreclosures, delinquencies, they are all at near record lows right now. The market is still very tight when it comes to underwriting, and especially because the government is backing the vast majority of these loans, and they have much stricter rules.
By the way, I can't get over the amount of building here in Washington.
Incredible. Cranes everywhere.
Are they out of cranes? I wish I was a crane seller.
No, it's a very hot market right now.
It really is. Diana and Mark, we appreciate your insight on a hot topic because everybody's moaning and groaning they can't find a place to live for what they can afford.